This is the monthly chart on Wells Fargo, and price is currently between a monthly buyer's level at 37.50 and a monthly seller's level at $64. However, price is closer to the monthly buy level, which would signify that price should be moving up over time. Now, they recently announced earnings on Friday. They reported better than expected results for the third quarter. Wells reported a Q3 EPS of $1.48, which was ahead of analyst estimates of $1.24. Revenue came in at $20.86 billion versus the consensus estimate of $20.11 billion. Here's what the CEO had to say following the announcement of their earnings. Revenue growth from a year ago included both higher net interest income and non-interest income as we benefited from higher rates and the investments we are making in our businesses. Expenses declined from a year ago due to lower operating losses. While the economy has continued to be resilient, we are seeing the impact of slowing economy with loan balances declining and charge-offs continuing to deteriorate modestly. Now, we do want to talk about their expenses declining. And so here's a video coming from CNBC as the CFO talks about their improved efficiencies.
Can that go even higher in this environment?
Yeah, I think as we've gone through the year, it's gotten better and better, over the last couple of quarters. And really what's been driving that is what we're seeing, with clients and deposit levels overall, the mix shift that's happening across deposits, as well as pricing. And so, we're still in somewhat of an uncharted, environment for many in terms of, the pace of the rates went up, the level of rates, the quantitative tightening that's happening there. And so you can certainly, potentially see some upside over time. But I think, what we gave in terms of our guidance is what we, is our best guess at this point in terms of the way the year will end up. But it'll be a function really of where everything shakes out on deposits and pricing for the rest of the year.
Mike, it sounds like in terms of operating efficiency that there are some fresh levers to pull. Can you sort of characterize whether that would be a reinvention of what you've already done or more an extension of it?
Yeah, it's more of an extension, Carl. And, I think we started, 3 years ago now, laying out priorities to, across the company to get more efficient. And, we laid out a, $10 billion plan to get, of gross saves over the last few years, and we're on path to execute that. And so as you sort of go through a program like that, you find more and more opportunity as you go through that. The old adage of peeling the layers of the onion, and you find more opportunity. And that's certainly the case here. And so I think we have more to do across really most of the company. Some areas more than others, but I think we do have more to do. I wouldn't say it's like new levers or new ideas. It's more of just continued execution across each of those things. And it just takes time to do that in a reasonable, thoughtful way. And by the way, I think it's not just about saving money and being more efficient. It translates into serving customers better. We can be quicker, we can be faster with clients, we can be more responsive to their needs, and I think so the efficiency actually brings a lot of benefits for customers as we execute.
There were some comments from some of your colleagues on other banks that reported today that the deposit repricing was happening a little bit more slowly maybe than they had originally expected. Can you talk about that?
Yeah, I mean, look, what we've been seeing, across our book, you start on the commercial side. Pricing's been pretty competitive there for a while, and it's not getting, less or more competitive, but it's been competitive consistently now for a number of quarters, and so that's not changing. It's really the consumer side where I think, some of the assumptions that people have laid out, including us in the beginning of the year, have been a little bit better than what we had modeled. Some of that's a function of clients continuing to just spend money and not move to other alternatives, but it's certainly played out a little bit better than what we thought since the beginning of the year. That's for sure.
Mike, you mentioned the outlook depends on deposits. We did see deposits fall, I believe, 1% in the quarter. And people are seeking higher yielding instruments. Where do you think we are in that process, and what kind of deposit assumptions do you have for next year?
Yeah, well, really on the commercial side, deposits have been pretty stable. And on the wealth management side, we saw the decline. We did see a little bit of a decline in the quarter, but the pace of decline slowed pretty significantly in the quarter, which is good to see. And that's the area where you've seen most of the most clients looking for higher rates. On the consumer side, the driver is really, the biggest driver is really spending. As people kind of spend and are out there in the economy, that's what's driving the consumer deposits down, across the book. And then there's a little bit of people looking for higher rates. And so I think we'll have to see how it plays out over the coming quarters.
Now, if we drill down to the weekly chart, we can see how price has been range bound for the better half of 18 months. You have extremes at the top of the range at 48. You also have extremes at the bottom, say at $38. So typically you want to buy when prices are in that $38 level and sell when prices are in that $48 level. So price has been range bound again for about 18 months in a $10 range. Going to the daily chart, price is making lower lows, lower highs, signifying that this current leg is to the downside. But again, you're going to have buyers stepping in again if price makes a lower low in this monthly area, potentially to move higher over the subsequent months. Thanks for watching. Subscribe. Please like the video.